Out with the old year and in with the new. Looking back on it now, 2023 had its fair share of surprises for investors, as the effective funds rate climbed from the low fours at the beginning of the year to the mid fives by the end.
That's really a question about what the level of rates will be going forward, what the neutral level will be. And I think it's very hard to know confidently what the answer to that will be in 5 years.
Normally, those higher rates would be bad for stocks, but the S&P 500 rose over 20%, starting the year around 3,800 and ending up more than 700 points. West Texas Intermediate crude started the year just over $75 a barrel, and after a spike when Israel went to war with Hamas, ended the year actually lower, hovering around $70 a barrel. So what does 2024 hold in store? Quite possibly Fed rate cuts, but according to PIMCO, not until later in the year.
Right now, at least I'm not pricing in a recession for next year, but I do expect a slow growth environment in the U.S. with the potential for recession risk, particularly outside of the U.S. That could open the door for rate cuts towards the end of next year, but it's unlikely that we're going to see rate cuts in the first quarter.
Kate Moore of BlackRock thinks there may be even further upside in stocks.
I don't think even if in a slower growth environment from an economic perspective, we're likely to see another big hit to earnings. And so I think there's a lot of a great ripe fruit to be plucked next year.
And for oil, it will likely turn in part on whether Saudi Arabia gets the results it wants from the cuts it imposed this year.
Our concern is that Saudis said they'll push through Q1 with cuts, but by the time you get to Q2, and if demand isn't strong enough seasonally, you could see Saudi dump the market and try and make everyone honest again.